morning, everybody. I think we have today in the pack something for everyone. We have the third downgrade in less than a year from pathology and medical center pathology provider Primary. We have verification of yearly sales volumes from recently the downgraded from reduced rated Sirtex Medical. And we have two emerging buy-rated medical device companies for clients with a little bit of higher risk tolerance. That is $375 million market cap. Impedimed, IPD, which we have added to our active opportunities list. It's in your inbox from last night. And we have 70 million market cap. Amedus, which is AHZ, ticker there, which is an interesting turnaround story. Now, first, quickly, onto Primary. We did maintain our hold rating on the name. Shares closed down 2.5% roughly following the company's downgrade of fiscal 16 guidance once again. That was up to 10%. That was due to nearly $100 million in write-offs on a number of balance sheet items. These range from anything from legacy IT systems to property losses to closing of medical centers. It's roughly about 3% of its total net assets. They increased the provisioning as well, and they did close the sale of some non-core items that actually impinged on some of their, actually included some of that downgrade as well. Now, while the downgrade and these write-offs don't really reflect its cash flow nor its bank's covenants, and they did say, which was positive, that the trading environment remains in line with expectations. That this downgrade, we really see no reason to be here. This company remains in transition, trying to get itself onto much firmer footing under a new management team, and the saga kind of continues as soap opera. As I said, the restructuring, management has come in and tried to change things around. This is a primary bulk billing model in an era, I think, that is going to change the bulk billers in general. So it's very hard. I can't put my hand on heart and say I want to get in here. It's just too hard, too difficult to forecast right now for everybody. And obviously, as I said, the drama continues with potential Chinese corporate raiders on the register. And we do have the CEO still under allegations of bribery and corruption charges, as he was the CFO at Layton's. So like I said, I can't really say you want to be there in the name right now. Moving on to Sirtex. We did make no earnings changes, kept our reduced rating on the name. We do see more downside risk in this company. It really put up just verification of its 6.4% dose sales. Well, it is its top line. This is interesting to us because they just verified a downgrade last month. So all they've really done is verified their guidance of 1 month forecasting. It was in line with their guidance range of 15 to 17%, right bang in line with what we were forecasting. What we're just looking at a bit more, we were surprised by the market's reaction. Stock was up 6.5% on the back of that. Really seeing that the growth rates are at a 6-year low. As I said, we do see more downside risk, especially heading into the year-end results next month. Consensus, we're sitting at 10% below them into fiscal 16. And we're also looking at the market failing to appreciate the clinical and regulatory risks with this name. Our price target sits 30% below consensus estimates. Moving on to Impedimed, IPD, we see it as a trading opportunity heading into this quarterly update, quarterly results. It's later this month. This is on its main product candidates, as well as its next generation device for heart failure. You're looking for updates there. Now, I'll remind you that this is an effective catalyst-driven trading stock. The last 3 times that we put this in the active or high conviction call in the last 2 years, it has returned a net return about 38%. So definitely something you want to put in front of clients with that high level of risk tolerance, as I said. And finally, Amedus, as I said, AHZ is a ticker there. Really an interesting turnaround story. Scotty was on the call last night, or yesterday, I should say, kind of listening to what they're doing. New management team in place, doing a lot of more costing outs, kind of repositioning their programs, really focusing on breaking even in July of next year. So looking at it, it's a 35-cent trading stock, as I said, not for everybody. But we have a considerable upside to our $1.48 price target. So definitely something to consider for clients, like I said, with a higher level of risk tolerance.